Hello learners, hope you are doing good. Now that you all have mastered the understanding of financial statements part 1, it's now time to buckle up as we drive ourselves into the next chapter, that is financial statements part 2. After studying this chapter, you will be able to describe the needs for adjustments while preparing the financial statements. Number 2, explain the accounting treatment of adjustments. Number 3, prepare profit and loss account and balance sheet with adjustments. Introduction. First, let's just revise the terms we have learned so far. First, income statement stands for trading and profit and loss account. Second, position statement is also called balance sheet. Third, in financial statement 1, we have prepared simple financial statements of a sole proprietor, which presupposes that there is no complexities in normal business operations. But in actual practice, certain expenses are outstanding and some are prepaid. Likewise, some incomes are received in advance and few still accrued. Accounting process is based on accrual concept. Going through the basic concepts. First concept is capital expenditures are incurred for acquiring fixed assets in the long run to enhance earning capacity of the business, whereas revenue expenditures are incurred in day-to-day conduct of the business to maintain its earning capacity. Other one is direct expenses related to production are shown in the trading account and indirect expenses in the profit and loss account. You all must be wondering, why do we need to make adjustments in final accounts? No need to wonder further on them as we are going to start with them now. First assumption is accrual basis of accounting. According to accrual concept of accounting, incomes and financial positions of an accounting year is ascertained when revenues be considered on earned basis and not on receipt basis, and the expenses be considered on incurred basis, not on paid basis. Second one is matching principle. It is necessary to match revenue of the period with the expense of that period to determine correct profit or loss for the accounting period. Next topic is purpose of adjustments. The basic purpose of making various adjustments is to ensure true and fair view of financial performance, that is profit earned or loss incurred for the accounting period, and the financial position of the enterprise at the year end. Items of adjustments are: number 1, closing stock; number 2, outstanding expenses; number 3, prepaid or unexpired expenses; number 4, accrued income; number 5, incomes received in advance; number 6, depreciation; number 7, bad debts; number 8, provision for doubtful debts; number 9, provision for discount on debts; number 10, manager's commission; and number 11, interest on capital. Adjustments given are recorded once in trading and profit and loss account and again in balance sheet because of dual aspect principle. Now, let us talk about dual concept. Every transaction entered into by an enterprise has two aspects, a debit and a credit of equal amount. As you know, there are various items of adjustments Let's discuss them one by one. First adjustment is closing stock or inventory. It is closed by transferring to trading account. Adjustment entry: closing stock account debited to trading account. The relationship between adjusted purchases and closing stock. Purchases account debited to opening stock and closing stock account debited to purchases account. Adjusted purchases is equal to net purchases plus opening stock minus closing stock. Closing stock is accounted in the final accounts as follows: A, on the credit side of trading account; B, on the asset side of the balance sheet as current assets. There may exist some receipts and expenses in current year, which may partially relate to previous year or next year, and some receipts and expenses still need to be brought into books of accounts. These items require adjustment to determine true and fair view of financial performance for accounting period and financial enterprise at the year end. Let us consider these revenues and expenses. First, under this category, outstanding expenses. Expenses due but not paid. Adjustment entry: concerned expenses account debited to outstanding expenses account. Let's look at simple problem to test our understanding of outstanding adjustments. Salaries paid during the year ended 31st March 2020 given in the trial balance rupees 11,000. Outstanding at the end of the year rupees 1,000 given as additional information. Approach to solve the problem is as follows: journal entry: salaries account debited 12,000 to outstanding salaries account 1,000 to bank account 11,000. In salaries account, both bank account and outstanding salaries account will appear on debit side, and total salaries rupees 12,000 will be transferred to profit and loss account. In profit and loss account, debit side outstanding salaries will be added to salaries account amounting to rupees 12,000, relates to accounting year ended 31st March 2020. In salaries outstanding account, credit side salaries account appears rupees 1,000. It is balance as it is a representative personal account and represent liability. Under balance sheet, salaries outstanding will be shown on liability side as a part of current liability. Now, we have another adjustment called as prepaid or unexpired expenses. It is a type of expense which have been paid during the current accounting year, but the benefit of which will secure in the subsequent year or years. Adjustment entry: prepaid expense account debited to expense account. Now, we have a problem based on prepaid expenses. Rent paid rupees 5,000 given in a trial balance, out of which 1,500 belongs to next accounting period. Additional information. Now, let us try to solve the problem. Rent account debited 5,000 to bank account 5,000. Prepaid rent account debited 1,500 to rent account 1,500. Rent account debit side, bank account appears with rupees 5,000, and on credit side, prepaid rent account rupees 1500 and the balance will be transferred to profit and loss account. Unexpired rent 1500 will be deducted from rent rupees 5000 in the profit and loss account. In the balance sheet, prepaid rent is shown in the balance sheet on the asset side rupees 1500. Next in line is accrued incomes or outstanding income adjustments. Accrued incomes are those which have been earned during the accounting period but have not been received. According to accrual concept of accounting, total incomes of the period, both received or yet to be received, should be accounted in the final accounts in order to present true profitability and financial position. Adjustment entry: accrued income account debited to income account. Practice problem for this adjustment is: commission received during the accounting year rupees 25,000, commission accrued but not received rupees 5,000 during the accounting year. Entries to be passed: bank account debited 25,000 to commission received account 25,000. Accrued commission account debited 5,000 to commission received account rupees 5,000. In commission received account, bank account and accrued commission appear on credit side and the total of these two accounts will be transferred to profit and loss account. In profit and loss account on credit side, accrued commission will be added to commission received account. In accrued commission account, commission received account appears on debit side. It is a income earned but not received, hence it will be shown on the asset side of the balance sheet as current assets. Last adjustment of today's episode is unearned income or income received in advance. Unearned income means that has not been earned but is received. Adjustment entry: concerned income account debited to income received in advance account. Example of the adjustment is: rent received during the accounting year ended 31st March 2020 is rupees 36,000, including 6,000 for the next accounting period. Entries passed: bank account debited 36,000 to rent received account rupees 36,000. Rent received account debited 6,000 to rent received in advance 6,000. In rent received account, bank account with rupees 36,000 will appear on credit side, whereas rent received in advance on debit side. The difference of rupees 30,000 will be transferred to profit and loss account. In profit and loss account, credit side, rent received in advance will be deducted from rent account. Rent received in advance is income earned in advance for which services are not provided. Being credit balance is shown in the liability side of the balance sheet. Keep a note: if any outstanding expenses, prepaid expenses, accrued incomes or income received in advance are given in trial balance, it means adjustments are already passed. Therefore, are shown in the balance sheet as per their nature. Take out your pens and registers, as now it is time to solve some practical questions. From the following information of trial balance as at 31st March 2019 of Mr. Ram. Prepare his financial statements. Go through the accounts provided to us for both debit and credit balances. In the question, we have to make all the 5 adjustments we have learned so far. Number 1, stock as on 31st March 2019, 1,50,000. Outstanding wages 20,000. Third, salaries paid in advance 50,000. Number 4, commission received in advance for next accounting year 5,000. Number 5, rent accrued but not received rupees 5,000. Approach to solve the question. Wages outstanding 20,000 added to wages account, total amount is rupees 1 lakh. Debited to trading account as it pertains to the current year ended 31st March 2019. Accrued rent incurred but not received, therefore added to rent received account and credited to profit and loss account. Commission received is an income which is not yet earned, therefore deducted from total commission received in the current accounting year. Final amount credited to profit and loss account rupees 20,000. Salaries paid in advance relate to next accounting period. So, deducted from total salaries paid in the present year. Rupees 2 lakh charged to profit and loss account. Credit side of profit and loss account is greater than the debit side, results in net profit 2,25,000, which will be transferred to capital account. To prepare the balance sheet of RAM as at 31st March 2019, start by grouping liabilities and assets on the basis of liquidity. Most liquid items are at top. Commission in advance and outstanding wages are the liabilities, so appears under the head current liabilities. Prepaid salaries and accrued rent are assets in nature, hence shown as current assets. Both the sides of the balance sheet, liabilities as well as assets, has the same total 5,70,000. Time to look at some multiple choice questions. Question number 1. Adjustments given are recorded once in trading and profit and loss account and again in the balance sheet. It is because of A. Matching principle, B. Dual aspect principle, C. Accrual concept, D. Materiality principle. Question 2. Outstanding wages is shown in A. Trading account and balance sheet, B. Profit and loss account, C. Trading account, D. Balance sheet and profit and loss account. Question number 3. Closing stock is valued at A. Cost, B. Net realizable value or market value, C. Cost or net realizable value or market value, whichever is more, D. Cost or net realizable value, whichever is less. As you can see, correct responses of the multiple choice questions are encircled. Next question. Prepaid expenses, if given in the trial balance, is shown in A. Trading account as deduction from concerned expense, B. Profit and loss account as deduction from concerned expense, C. Profit and loss account as deduction from a concerned expense and balance sheet, D. Balance sheet. Fifth, accrued interest appears in the trial balance will be shown in profit and loss account, trading account, balance sheet, profit and loss account and balance sheet. As you can see, correct responses of the multiple choice questions are encircled. Let me give you a quick overview of the topics we have learned in this episode. We started with discussing the importance of adjustments in the preparation of financial statements. If these are not given due care, then financial statements will not depict true and fair view of performance and financial position of the business. I hope the concept of the financial statement with adjustments are clear to you. In the next episode, we will continue with another set of financial statements adjustments.